Hello guys, welcome to the first video of my Forex Master Course series. This is the first video in which I am going to introduce yourself to Forex trading. There are many other type of trading like stock market trading, but why I have chosen Forex? I have chosen Forex because of as you people don't have that much capital, so that's why I chosen Forex. Because in Forex you can use funded accounts to make profit, but in stock market there is none of other than concept of funded account, nor any concept without you can make profits without a big amount of money. Now what is Forex? Forex basically stand for foreign exchanges. Foreign exchanges means if you are going to trade euro USD, let's suppose euro USD is a pair in Forex, one of the most volatile pair. Euro USD, that is stand for euro and dollars. The difference between euro and dollar, what is the difference between euro and dollar? It exchanges within a fluctuation of seconds, and we used to capture that fluctuation of second as our trade. The Forex market is the world largest market, about a $6 trillion market cap. Now I am going to tell you today about the all the basics, like what is candlestick, what is how to read a chart a little bit, how we can think that from that point we can buy here or we can sell here. And we are also going to tell you about the concept of lots, and also about the concepts of pips. Pips is basically a unit to calculate the total amount of you captured and the total amount you can take for asset. That is basically the measurement unit in Forex trading on charts. Okay, so let's come on screen and let's understand. Okay, so before coming to our screen, I am going to tell you about, you can see a candle over here, right? It's a green candle, right? This is the opening price. At this point, this is the opening price, and this is the closing price of a green candle. That means the price has opened from here and closed here. And you can see that rest portion, this is wick of a candle. Same goes for, that is not the same, basically the opposite goes for red candle. This is the opening price of the red candle, and this is the closing price of a red candle. Now a green candle always stands for price to go up, and red candle always stand for price to going down. Now why does this candle occurs in the market? The candle occurs in the market due to the volume, that is the money of every people, every investor, every bank, and anything else. That from by that thing the candle forms in the market, and you have to read the candle structures and with your strategy, and then you can reach. Let's go on start charts. Okay, so uh, as I have told you about the the Euro USD concept, let me type. This is a chart of Euro USD. That is Euro EUR USD. So first of all, this euro is the base currency. This is known as the base currency here. This is the base currency, and this is the secondary currency. USD is the secondary currency, and it will same goes for GBP USD. Here GBP is the, if you go for think about GBP USD, GBP is the Great Britain pound, that is the base currency of the asset GBP USD. Now let's now today there was a news, that way you can see this big momentum. But let's come to the basics. What is this candle? This candle, you can see this is the news candle. Ignore that. But this candle, for this candle, for making this candle of the particular chart, there is thousands of dollars of money is invested at particular time to create this kind of candles. And you have to understand the candlestick pattern, uh, to a bit candlestick pattern a bit, because it works good. But you should have a good strategy to use candlestick pattern. Okay, so you can see a indicator which I have applied on the chart, that is the session indicator. Basically, there are three major session of trading Forex. First is the Asia session, which starts around morning 5 o'clock, and it ends up around 12 to 12:30 at the afternoon. And then starts the London session, that's basically start from 12:30 at afternoon and ends up at 9:30. And the New York session, that is one of the most important session, that starts around 5:30 at the evening and ends up at when the market gets closed. Now the most volatile trading session is this overlap. You can see this. This is the London session. This is the London session time. You can see on the square, and this is the New York session. You can see this overlap part. This is one of the most volatile time to trade on Forex. And at that time, I used to stream. You can follow my streams. Sometimes I used to stream a little bit. Now, now let's understand what is pips. What is pips? Basically, what is pips? Now, pips is the unit of trading. While you are capturing profits, you should know how much pips you are trading, how much pips you are capturing. Basically, this is today's the news candle. Let's measure the pips here. At first, you have to go this scale, and you should tap on the candle low, and then turns around the candle fully. You can see this, it's written 77.5. This is the pip. This single candle is 77.5 pips. This candle is of 77.5 pips. If you want to measure this pullback, let's calculate. Same way, it's of 20 pips. This is a 20 pips pullback. Now, you have understood pips, you have understood the sessions, you have understood Forex. Now, you have understood the candlesticks. Now, let's understand the support and resistance zone. Let's come here. The support is basically where the price goes up, where there is a probability that the price will go up. That is, the candle will go up. Suppose this at this region the price is going up, so we can consider this as a support zone. And from this position the price is continuously going down, we can consider it as a resistance zone. This is a very basic concept of support and resistance, and in the second video I am going to tell details about support and resistance. Now let's come to the point where you should place your trades, where you can make profits, where you can make losses. I mean, where you should execute the trading activity you should do. There are two processes of Forex trading. First is using your own fund, which if you are doing in India may be considered as illegal, because Forex trading is illegal in India. But if you are trading on a funded account, it's legal to trade in India, because you can file your tax as a freelancer of that company of funded accounts. And at funded accounts there will be a less chance that you will lose your maximum amount of money, because the cost of a funded account is low, and you can, if you can trade a good, you can take big payouts from the funded account. Now, I think this is enough for the first video of the first introduction to Forex trading. On the second video we are going to understood the market structure, how to identify the market structure, and how you can predict that from there, how there is a probability that the price will go up or down. There are the four series around the fundamental analysis, the technical analysis, and the last is the trading strategy, which I am going to share with you at the last video. Stay tuned. Now, at for this video that's enough. Make sure you taken notes, at least remember a bit. Thank you for watching. Subscribe the channel and follow on Instagram.